Hey Art, in answer to this whole thing with the yen and the euro, we didn't stand a chance trying to catch any long on this or nothing. I mean, every yen pair that I go to from the open, it just took off, and there were some signals, a few signals here and there. Well, this is a pound. I'm sorry, with the euro. There was a few signals that I got of it, that it could show signs of being long. This is a weekly, so that doesn't count to a day. You can see the same thing. I mean, that yen just, man, it just got hit. Actually, this is the yen being weak by the move to the upside. The other pairs are hitting it. Anyway, what I did do, I did look at some of this on the euro yen, and the Aussie yen was interesting. First, I'll look at the euro yen. On the euro yen, as you can see from the trend line, this is a running line that came from a longer term break point that was on the weekly. Let me show you. See there, just the weekly chart showing the move to the downside after channeling for quite some time there, breaking this area here where you've got these two red lines. These go back a long way. Okay, that area there. These yellow vertical lines are Fibonacci timelines I did on a day chart to try and determine when that next turn is going to take. You go back to the day, look around March 19th maybe, or somewhere around in there, or should we say more like 13 trading days from today would be a more accurate uh, one from that. But you see it's got to close above this running line, and it's got room to continue moving up to this 126.90. Of course, you know that what we would do on this would take that low, this high, find that retracement area around 121.40 something, and see the support right here and right here. So that 121.50, 121 and a half or so would be a great retracement spot. And it already did it here on the Aussie. Watch this. Look, this is the daily chart, and you see it did the running line here. Okay, broke, and look at what we got. It came back, it did the 50, and it's on its way up. Now, here's the thing you might be looking at too. When you did this, you drew this red uptrend here, and then it got a close below it, and it broke the low. So you start thinking, okay, it's a short. Well, maybe not by Friday's action, because if you look at Friday's action, let me get rid of this for you. Hold on. Okay, I had to redo the Fibonacci so you could see. The Fibonacci, let's close in a little bit more if I can. The Fibonacci on the short side, going short, it's closing above our entries. Okay, you can see the closes here, and this is the 618, which is the highest that we really should be worried about. It's going to probably bust through this because it's got room to it. But you see, this is 618. It's closed above it. If it breaks that high, you can look for it to keep moving to the maybe 125 before a correction, as you can see over here. The 125, it could have the strength to move to 150. So, with that in mind, I mean, there's more bullishness to this move than there is bearishness in terms of this reversing to come back. Especially if we break this high, because then we'll have a new high from a new series of a higher low from here to here, and then we'll get this high. If it's broken, that's a new high, so a new uptrend for certain would be in play. Okay, in a way, if you want to be aggressive, you could say that this high was broken, because you've got a low, a higher low this time, but it doesn't. It's still in that consolidated long-term point. Also, if you look at the baseline from after the running line, it closed above that too. And so if you were to take this and move it so that it was going more conservatively off the baseline, you would see that you still came through at the 618. This is in reverse. It should be turned around. Sorry. Notice that both times, whether it's from the aggressive or the conservative, when it touches the that support here, it's the 618. It doesn't close below it. It bounces off of it. That's signaling that this is that was a good support level. Okay, so yeah, I mean, man, but you know what? Once again, like you said, man, it caught us all by surprise. It just jumped up on us. Oh, that's the euro pound. Jumped up on us, man. Never got a retracement, nothing. It just went busting loose. So even QuickView was unable to catch that move. Well, we get enough with it though. It's enough to make us happy. But just pay attention to that chart right there. That's a possible break move to the upside here. This is a day chart breaking that long-term running line. We could get some moves to go up to here. Hopefully it'll keep running until it can get to this Fibonacci timeline, about another 13 trading days, and get some bullishness going on here. And hopefully it could be even up in here somewhere around this 2.618 area in the Fibonacci extension before it gets here, which would put it nice and close to the baseline. Okay, and then we could get a nice push back down to the downside or whatever. I don't know, but that's what I see on this. Let's find out what happens. Hey, that was a good observation there for Friday. By the way, I got hit on the yen. I did a double dare short. Fortunately, it was a double dare, so I only did half of the maximum stop range. And made up for it with some other stuff. That's what's so important about trading more than just one pair. When you got more than one pair going on, if you get hit one place, you can make up for it somewhere else.